Hello traders, here are the events of the end of May. Here's Fibonacci reversal zone. This is proprietary Fibonacci levels that you learn in the course how to install, how to apply, and how to trade on any instrument, any platform you choose. All of these levels were identified days and weeks in advance. Trader who also understands that this is institutional trend inception, institutional support, never short near. What is the problem this morning? This key Fibonacci resistance, where shorts played out from. This is a short that right now reached key Fibonacci support, market in pain. This is the short from class this morning, where with students we identified to the tick every single trade. The short right now reached key Fibonacci reversal zone, short in a lot of pain. Are we seeing any longs? Absolutely not. We're only seeing shorts taking a pause. This is the most crucial moment in your trading, how to separate baits from trades. And if you understand that short only taking a pause, you are on sidelines. Nothing else here to do. Trader who enjoyed rule-based short, done for a day. And if market will be full of baits, knowledgeable trader will not touch this. This is the key. Knowledgeable trader who shorted the market as high as possible from key Fibonacci resistance in excellent shape. And when rules are met, knowledgeable trader will monitor for long. It is that simple. This is crucial institutional support traders, not the place to short. Short from resistance. No surprise here. And that's the reason the short taking a massive pause. Knowledgeable trader absolutely expect this. Worthless bullish pullbacks in a play. And that's what separates knowledgeable trader who understands that market full of baits, not trades. This is the example. Sell-off, taking a pause. Only when rules are met, you can take a trade. Doesn't matter what you trade, not the place to short near. So, always ask yourself a question before you place a trade. Are we at support or are we at resistance? As expected, as reminded. Not the place to short near. The place to exit your short. The place to monitor for bullish reversal. And that's the power of Fibonacci that no indicator on the planet will give you. All in advance. Never ever ever after the fact. As expected. Market setting up for pretty spectacular formation that knowledgeable rule-based trader will take advantage of. It is that simple. Rules are met, take a trade. The rules are not met, do not touch the markets. This is extremely important moment in the market. This is key. Knowledgeable trader knows that. This is when we're gonna start respecting this bullish formation, where buyers will pick up the steam with one little loss stopping ground here. And that's the power of the method that show you where to monitor for short, where to monitor for long. It is that simple. We are on standby for long. All the shorts are done for this morning. We are at Fibonacci reversal zone. As expected, market staged a spectacular, powerful reversal. And as expected, we know extremely well that we're gonna know right now if the market remains full of baits or if market's setting up for spectacular bullish reversal. Key Fibonacci resistance in front of you. Exact same thing on Apple. Exact same thing on Amazon. Exact same thing on Euro, Pound, Bitcoin. All of those traders I work with right now. Traders who trade $5,000 account. Traders who trade $50,000, $500,000, $5 million, $5 billion account using the method. On futures, on stocks, on Bitcoins. On any instrument you choose to trade, as you see in front of you every single day. The power of price action for entry and Fibonacci for exits. Nothing else matters. This key Fibonacci resistance is not broken. It's a bait. It's a worthless bullish pullback. Knowledgeable trader knows that. That's what we monitor it for. This is the end of the minor trend. As expected, price is struggling. So we're gonna be stuck here in this trend inception with weak buyers. We have zero interest in touching this. This is a key Fibonacci resistance in the markets for the last 30 minutes. This is exact same Fibonacci resistance on Apple 2017-18 for 7 months. This is exact same key Fibonacci resistance on Amazon 2018 for months. And this is exact same Fibonacci resistance on S&P in 2016. What S&P is doing right now on 1 minute chart, where S&P staged phenomenal pullback for the next 8 months. What is the price showing you that's ahead? 2300 number. Night of the election, stunning bullish rally and market skyrockets to next Fibonacci level. All in advance. Never ever ever after the fact. And that's S&P in front of you right now on little junky day trading chart that has exact same accuracy. All in advance. Never ever after the fact. We are setting up for phenomenal market when knowledgeable trader will have massive numbers of trades. When knowledgeable trader reminded, if you know where Fibonacci reversal zone, you know where to exit your shorts and you know where to monitor for your longs. It is that simple. Only one little obstacle remained. This obstacle is out. Market will skyrocket next. Just like on Apple, just like on Amazon, just like on S&P weekly. This is the key. And as always, always in advance, never ever ever after the fact. In day trading minutes in advance, in investment and long-term position, days, weeks, months and years in advance. All depends what instrument you choose to trade, as price action remains the same. That never changes. In trading, you operate as a sniper. In trading, you learn market full of baits. We know extremely well that this is the area that's gonna remind us all that buyers remain very, very weak. Did we know or did we know that this is where pullbacks will start again and again and again? 1 minute chart is your key parameter chart that you learn to use to monitor for meaningful price action formations. Without meaningful price action formations on this junky little chart, nothing in the market is possible. Agree? We knew extremely well this is the exit on short. We knew extremely well that buyers will step in. We knew extremely well that this will be a problem. This problem remains. And if price collapses all the way back down, it means market becoming better, testing you to the core of knowledge. Reminding you, pulling a trigger randomly never a recipe for success. Knowledge is. Buyers are weak traders. Just like on Apple for 7 months, just like on S&P weekly for 7-8 months, just like on Amazon for weeks, just like on Netflix right now. My goodness, stunning Netflix earnings every single time. So why in the world does this remain a problem? Because Fibonacci said so. Stunning earnings don't mean a thing. 376 means everything. Time and time again, Netflix keep adding millions and millions subscribers. So why in the world is it struggling this year again? Simple. Fibonacci said so. That's the reason. Why in the world did the Netflix sold off from 428 all the way to 220? What is the reason? One reason only. Fibonacci said so. This is Netflix now, but this is a Netflix more than a year ago. Do you remember this? Stunning earnings? Oops! Shock or not. Reversal zone not the place to buy. And do you remember decision point 2 on Netflix at 400? This is S&P this morning. Exact same thing on your key hourly chart. Just like on Netflix. And if I convert this chart to 5, exact same formula will remain. Just like on Netflix. Shock or not. Stunning earnings on Netflix don't mean a thing. Fibonacci resistance means everything. And that's what happened to Netflix next. As Netflix crashes through key support 315. Where's the reversal zone? 220, 200. Where Netflix rallies from. As expected. Just like S&P. Correct? Not the place to short near. No surprise. 376 is a problem. All in advance. Never ever ever after the fact. Charts are twins. This is Netflix. Everything identify months in advance. And this is S&P. Charts are twins, exact same bullish reversal, no matter what you trade. Identical formula applies. Netflix is so much pain, so is S&P, exact same Fibonacci resistance. This is the reason Wall Street executives taking the course. This is the reason hedge fund managers trading the method. What you decide to trade, absolutely up to you. Doesn't matter. If you trade little charts on S&P, or you trading Netflix. Identical accuracy. Poor Netflix. As expected. In horrific pain. Stunning earnings don't mean a thing. Fibonacci means everything. Charts are twins with S&P this morning. Just like on Apple, just like on Amazon, it's all the same traders. The only difference, risk management and how long you want to hold position. Is it 5 minutes? Is it 5 hours? Is it 5 days? Is it 5 years? Choice is yours. Market is stunning Fibonacci puzzle. S&P in pain. Buyers are weak. We are dancing in very narrow range. We knew extremely well this was a bait. We knew extremely well, just like on Netflix, buyers are weak. Market testing you to the core. Only if rules are met you can take a trade. Exact same thing applies across the board. Doesn't matter if you're holding position 5 minutes, 5 hours, 5 days or 5 years. Buyers are weak. We're stuck at S&P reversal zone with worthless, weak buyers. Knowledgeable trader knows that. Just like on Netflix. Charts are twins. Exact same rally from Fibonacci reversal zone. Exact same number of baits at key Fibonacci resistance. What is the difference? Hold time, days, weeks, months and years. This chart hold time, minutes. This chart requires few $1,000 account. This chart requires very different size account, very different hold time. But if you would like to trade them both, why not? Multiple students do. Use everything for day trading and long-term positions. For one simple reason, price action remains exactly the same, no matter what you trade. Once you master price, you can trade them all. S&P, Apple, Amazon, Netflix. Euro, pound, bitcoins. These are the traders now in the course. As buyers keep coming from Fibonacci reversal zone, the place you never ever ever short near. This is a crucial moment remains when knowledgeable trader separates baits from trades. If buyers will remain weak, knowledgeable trader has zero interest in baits. Knowledgeable trader never ever ever shorts near Fibonacci reversal zone. Success rate near this level less than 20%. What is the problem now? Buyers are weak. Market full of baits. Knowledgeable trader on standby, waiting for the rules to be met. And only when rules are met, knowledgeable trader will take a trade. We know extremely well that this is not the place to short. We know extremely well that buyers remain weak, that market remains full of baits. Stuck at trend inception with bullish weakness. Quite a problem remains. Exact same dance on Netflix. Such a bummer. We need bullish power. We do not need baits. And this is how you test it to the core every single time, every single day, on every single trade. And this is how you stop sweating. If you know the rules and if you play by the rules, you start enjoying this game. You stop shorting into ultimate support, into ultimate trend inception. You stop buying into Fibonacci resistance. When you understand this is baits all over the place. It is that simple. Only when rules are met you can take a trade. Do not touch the baits. Do not be chopped up in bullish weakness. So moments like this are the most important moments in your trading. This is when you stop losing money. This is when you stop wasting time. Shorts reached key Fibonacci bullish trend inception. Trade target is reached on short. What is the problem on longs? Buyers are worthless. Market testing us to the core. Knowledgeable trader knows this. This is a chart on bonds traders. It's been bonds at 148.09 for the previous 6 months. Taken bonds 6 months to break through this area, correct? No surprise where bullish rally on bonds came from. And that's S&P now, in brutal pain. Market full of baits. Nothing good happening here. And that's the difference between knowledgeable trader who plays by the rules versus trader who chases markets. We agree? It is that simple. So here we are. We knew extremely well that we stuck here in bullish weakness. We knew extremely well that shorting nil will produce results of less than 20%. Here we are, an hour later, market remains full of baits, remains stuck in bullish weakness. To remind you, this is exact same identical chart on oil. Do you remember oil in 2016? Shock or not, this is oil. At trend inception, what is the problem remains to the upside key Fibonacci resistance. Charts are twins with S&P this morning. On 1 minute chart, you can trade 1 minute. You understand price action. You can hold oil long term. After oil broke through key Fibonacci resistance, after trying for many months, what did oil do next? Shock or not? Took a massive pause at 55. 55 key Fibonacci resistance. 2018, when oil reached 64. Key pause, which is exact same level as you saw on S&P this morning. And what is ahead of you? Fibonacci reversal zone, all in advance, never ever after the fact. Anyone surprised where oil starts selling off from? Exact same place where oil rallied from in 2016. It never gets sold, I promise. And this is oil next. Boom! One obstacle remains. Key Fibonacci support. Did oil crash from this level? Of course. All identified in advance. Never after the fact. Not the place to buy oil, the place to exit oil. Pretty please. 64 is out, 55 is next. Key Fibonacci resistance becomes key Fibonacci support. And this is oil now. Shock or not. What was the problem to the upside? Exact same level as on S&P. This morning. Charts are twins. You can trade oil, you can trade S&P. What is the difference? You're trading little charts, you're holding position for a minute. Exact same level as a problem on oil. All the same. All in advance. Never ever after the fact. And that's S&P this morning. Knowledgeable trader who understands what separates pain from spectacular market condition has zero interest in baits. This is a market now full of baits. Only when rules are met you can take a trade. Rules are met when spectacular bullish formations are formed. Now market is worthless. Market in pain. However, it's still sitting at key Fibonacci support, at key Fibonacci trend inception. Not the place to ever short near. If you do, you love trading with less than 20% success rate. As you saw on oil, on S&P, on Apple, on Amazon, as you saw on bonds, as you saw recently on Tesla. Here's a lesson on Tesla. Poor Tesla. This is a Tesla traders in 2018. Is there a surprise where Tesla sold off from? Of course not. From Fibonacci reversal zone. What is key? Fibonacci support. This is Tesla. 20 weeks later. Shock or not? Key Fibonacci support remains. Key Fibonacci resistance is a problem. This is a Tesla the entire 2018. No surprise. This is exact same thing playing out on S&P right now on 1-minute chart, except S&P on the bottom, Tesla was on top. Finally, Tesla starts crashing. What is the key support that remains? 255 level. What is the key resistance remains? 388, 385. Doesn't matter what Elon Musk smokes or does. Doesn't matter what his lawsuits are, as long as key support respected until finally, year and a half later, this support is out. Ciao, Tesla. There is no surprise when 255 is out. Did you know that? Of course. And what Tesla will do at trend inception is a spectacular reminder. Nowhere to enter, nowhere to exit. And if you play by the rules, the skies are the limit. All in advance, never ever after the fact. As S&P remains in pain at key Fibonacci resistance, bullish weakness remains. Nothing good is happening here. And this was exact same dance on Euro the entire 2018. This was Euro at 118. Charts are twins with S&P this morning, when Euro kept trying and trying and trying, but 118 was never broken. Bullish weakness remained. So, we did not waste our time this morning. We knew extremely well what separates strength from weakness, as S&P remains in pain. Just like Euro the entire 2018, just like Tesla, just like Apple, just like S&P, just like Amazon, just like bonds, they all the same. So if you want to join the course where we have beginner traders along the side with hedge fund managers and Wall Street executives, I look forward working with you. Please review the information on the website under course section, and please remember, if you're considering signing up for private mentoring, pretty please do contact me first, as private mentoring currently waiting list, and only if you sign up and we speak in detail, I will accept private mentoring students. What else is extremely important to remember? This is the last week when we offer such a discounted price for group course. After this week, next week, price is raising to the regular price of $49.77. When private mentoring fees will also increase significantly, because there is so much more to come when Alpha Fibonacci software will be unveiled first to graduates of the course. So this is your chance to sign up at discounted fees. Last chance only. If you have any questions, do not hesitate to contact me. 925-257-4298 or info@fibinstitute.com. We are having a ball. We are having a fantastic time. If you are serious about trading, you came to the right place. As if you play by the rules, the skies are the limit, because S&P remains in pain. This is the most important moment in your trading, to separate spectacular bullish rallies from worthless formations. One key Fibonacci resistance remains an optical, showing you bullish weakness across the board. Quite a problem. Not for knowledgeable trader, who is not wasting time, who is not losing money. Choice is yours. What you want to trade.